As
So thanks again, CoinSpot, for being co-sponsors today in the DLT enabled online summit. XDC Network has been pretty much the key player in this whole particular industry sector, and we have had pretty granular engagement with some of the great peak professional bodies and standard setting bodies throughout the world since we started, which was in 2019. Who is XDC Network? We were established somewhere between Singapore and Dubai through the MAS and the ADGM back in 2019, coming out of the Ethereum nursery. So we're a layer one EVM. What sort of distinguished us, I guess, is from the very outset, we had all our master nodes KYC'd. So it was just strictly a regulatory savvy blockchain from the outset. Because we knew what we were here to do, and that was to tokenize the paper and the titles of documents, and also pairing that with the payments and the financing. So we'll get into that. One of the great other upgrades to our blockchain network in recent times anyway was the capability to forensically monitor the activities of the nodes. So essentially, if there is any BFT malicious attacks, which is highly unlikely given that we now have a 3-block finality. But if anyone was silly enough to try and approach that, it would be pretty much detected in real time, probably before they even knew they were being detected. And that sort of information is legally upholdable in a court of law. So there is very strong deterrence, and that's pretty much basically the foundation building blocks of XDC Network. Is we take that role of taking on trade and trade finance very seriously. So today's topic is trade finance initially, but I think I just wanted to make sure that most of the audience probably have a little bit of a leg into this conversation, given that a lot of this depends on the tokenization of the titles of the trades as well. So it is a twin step, being able to finance a trade. In a lot of cases, it requires the actual confirmation that the trade has been completed and the transfer of the title of the document of the cargo as well. So I will be bringing that into the conversation, and I've got some very, very notable people to do that today. Thankfully, they heeded the call. I will let them introduce themselves in just one moment, but I also wanted to also make sure that, we all sort of understand and appreciate we're in a very special year this year here in Australia in particular. And I'm not just talking about the election for that matter. The Attorney General's Department is considering and has received public consultations now of taking on the model law on electronic transferable records, which has been something in existence for almost a decade, I think now, with a cohort of maybe 7 original founders, Singapore being one of them. And it has expanded over the last 3 years in particular. We've had a bloom that has included certain states of America, United Kingdom, and now France. So I think Germany's on the edge and Japan's going through a transition. So I just wanted to make sure that we all really understood where things were hinging right now. We can talk a lot about the finance sector, but we're also having regulatory improvements and exciting movements in the broader other regulatory areas, which basically extend into what XDC is been doing across the world. So I would like to bring in my panel, Bryan of the Australian Centre of International Trade and Investment and ex-Australian Chamber of Commerce and Industry as well. Bryan, how are you today?
Going really well, Sean. How are you?
I'm doing okay, thank you. It's been a long day already. There's been so much quality on offer here.
Fantastic day. I've been following it along where I can. Great.
Yeah. I have seen your name up on the viewer board, and I'm really glad you have, because there's been some very good speakers, and it's just great to see you here, Bryan. Thank you. Sunil Senapati who is the CEO of a dApp that's been built on XTC Network, which basically looks after a lot of trade digitalization and financing as well. That's called XTC Trade dApp. Sunil Senapati.
Hey, Sean. Hello, everybody. Great to be here. And, yeah, a very exciting topic being discussed so far. I hope I can add my 2 cents to it. And my work in Dubai is still not over here. So it's an early day for me. It's still 8 a.m. Not as bad as Salwa. So
Yeah, that's
happy to be
right.
here.
I think when we organized this panel a couple of months ago, I think both yourself and the next speaker were in reasonably good time zones for this, but it seems as though you're all moving away from the sun, unfortunately, which brings me to Salwa Benbaha, who is the institutional head of ventures in XDC Network with, in particular, Trade for Next. So Salwa, very good early morning to you in London.
Good morning and good afternoon. Thank you for inviting me to join this panel, and I'm looking forward to contribute.
Thank you very much, Salwa, for making the early rise. And I know you have come off some very important conference paneling yourself from yesterday in London. So thank you for making that effort today.
My pleasure.
Okay, so obviously I've got a loose structure today. I have a few things I want to cover, but we're all, leaders in the field here, so we can pretty much have a good conversation. What I'd like to maybe just sort of bring into this from the get-go is, we're talking about the regulatory environment, and I think that's a good foundation to have. A lot of technology obviously is innovative and it starts from a technological point of view and then regulations catch up. But let's put it in the proper order, or at least in an order that makes sense for a practical realization of the technology. So on a regulatory level, and I will start with Bryan first, because Australia is going through that important year with the MLETR being carefully considered by the Attorney General's office. But we historically in Australia have a very strong relationship with one of the early adopters of MLETR, and that's obviously Singapore. With your background in the Australian Chamber of Commerce and Industry as Trade Minister, or Head of Trade rather, and then your ongoing work consulting with the Simplified Trade System and with ACITI as well, are you comfortable and maybe step us through some of those experiences that you've had over the last, I don't know, 10, 15 years with maybe give us the abridged version, but how do you feel how do you feel the Australian-Singapore relationship is being good for both of us?
Thanks, Sean. Look, there's a lot of good stuff which is going on globally in Australia and other locations, but it's still taking a long time. Although, I take some counsel from other people is, what should our expectation be of the speed of change? We're dealing in an international trade perspective with a system where documents have been around basically since time began. Stone tablets before paper, the ubiquitous paper now, and then moving into a world where digital and data systems are there. And I think we're still talking about a world where a lot of people think digitalization means putting it onto a PDF and scanning it and sending it by email to somebody. And so there's still a lot of gap between what do people actually understand and some of the types of technologies which have been discussed through the conference today, which is really exciting. And, how do we deal with those digital differences, if you like, or where they are in an evolutionary sense. Now, Singapore, as you pointed out, is really well advanced on a lot of these things, but Australia, not so much in the trade space. But Australia is a leader in some of this stuff, where the Department of Foreign Affairs, for example, has been negotiating digital components of free trade agreements or digital agreements themselves, firstly at the World Trade Organization level, and Australia was one of 2 chairs, three chairs it might have been, Australia, Singapore and Japan, who led the conversations of what's called the Joint Statement Initiative on e-commerce, for example. And so that work has been done, the text has been stabilised, but there's no domestic work program in Australia to be how do we go about supporting that. And as you pointed out, the model law on electronically transferable records, that's also part of public consultation in Australia at the moment. That process is now closed, but the Attorney General's Department is handling that. But it's a point I'd like to make around fragmentation inside the Australian economy. So that model law is part of a United Nations effort where there's a suite of model laws that support e-commerce. There is another one which has been done on cross-border identification, for example, and that's a 2022 model law where, again, there's no work program in Australia on that, but the model law exists. It can be picked up. But when we come back to things, Australia actually has a digital economy strategy. The previous government developed that and put it into place. The current government has acknowledged it and has done some modifications to it, but not. It seems to have downplayed it and wants to pick out a few things like quantum computing and other things as where the focus is rather than that. But if you look at the original, it says it wants Australia to be a top 10 or possibly even might have been top 3 digital economy in the world by 2030. So here we are, as you point out, at 2025. And if you did a little stock take on how are we traveling, at least in the trade finance sector, we're moving in that direction. But the physical movement of goods and all of the paper documents that go with that, we've got a long way to go with that. And just keep in mind, or for the audience to keep in mind, the UK government, when they went through the model law, estimated that 28.5 billion with a B documents are signed and printed and flown around the world every day, supporting international trade. It is enormous, and it has an enormous footprint, let alone the administrative burden, but the carbon footprint associated with it is huge. Yeah. So we've got quite a bit of work to do here, Sean. So I'll leave it there in my snapshot, but let's move the conversation on.
And it's very interesting too, because that 28.5 billion, is literally just a couple of years away, or however many strokes of pen away from being dissolved, essentially. So it'll go from something massive to something very small in the fullness of time. Sunil, I know you have very strong professional ties with Singapore, Singapore's government in particular, and then obviously working with your business within Singapore. How do you see that relationship with Singapore and Australia being an MLETR buddy as such? And do you feel like, from the Singapore side of things, has there been sufficient enough sort of interplay and connection, or is there more to come? What is your reading of that?
Well, if I have to answer specifically with Australia, yeah, we have a few, I would say, of course, we work very closely with IMDA in Singapore, which is Infocomm Media Development Authority. They are basically championing from Singapore to work with multiple corridors to see if they can do transactions digitally. So there is an effort to start working with Australia as well. And having said that, there are a few successful transactions conducted as well. But we don't have actual great breakthrough doing regular transactions with Australia. But I would like to remind all of you that a country, when they start accepting electronic documents legally, which is when it becomes part of their legislation, yes, they can start accepting electronic documents and clear cargo. But they can always initiate a trade when Australia is exporting anything. Electronic documents can always be created in the country to be consumed in, let's say, Singapore or Bahrain or UK. So we can always do a transaction where exporting from Australia. So that corridor is still open.
That's a very good point. We don't have to wait until we adopt it ourselves, because there was plenty of other trading partners. And I noticed that you were part of an IMDA event with the US Chamber of Commerce last quarter in Washington, I think it was. Or in DC, Washington, DC, I think it was, or New York. Can you kind of explain, your appearance there and, working with, American entities to do those sorts of digital trades?
Indeed. So that was with the US Treasury and Trade Department in the DC. And like I said earlier, there are work going on with multiple corridors, and US being one. They have Delaware State and New York State already aligned with Meliter, which means they can send and receive electronic documents to clear the cargo. But then the larger part businesses of US wanted to understand a bit more. So that workshop really helped the community there. And last year, we have successfully done transaction with a company in Delaware. So there you go. So they are military aligned in the US and they are doing transactions as well. So briefly about XDC Trade Network, what we bring to table is we help companies to create electronic documents and have them exchange those documents for trade finance. And there can be corridors which are military aligned already. So that's what we provide. If you allow me,
Absolutely.
I have a few. I have a few slides which I thought I could, uh, maybe it's a time or
I was
maybe
going to say
another time. But
I'd love to get that
okay,
a little bit deeper into the conversation because I wanted to just quickly jump over to Salwa. We're sort of focusing on the regulatory environment at the moment, and you're obviously based more in Dubai with the Middle East, and moving. Obviously, you're a French native yourself. Oh, sorry, Sunil, do you mind perhaps leaving that PowerPoint? Oh no, that's okay. Let me just continue. Sorry, Salwa. I just setting the scene for everybody, focusing more on the MLETR aspect, where have you seen, Europe and the Middle East sort of excel in the last, say, 5 years, or at least the last 2 years since you've been with XDC?
So the latest from my meetings of last week, the latest updates I'm going to give you from last week at the ICC Banking Commission that was taking place in Dubai. The focus is now on there's different stages of advancement. So there is the MLETR, what they call socializing. So it's the government facilitation, the capacity building, etc. And there is political support stage, and there champions identification, working group establishment, and so on. So when it comes to Egypt, there is a lot going on right now as we speak. There is even there was a meeting. There is a meeting today actually happening there, where Egypt is seen as at the cross border of Africa and Europe, and it's a huge market when it comes to trade. So they are on to the first stage. They're discussing, with the government, with the different stakeholders to try and identify. No, considering that Egypt was one of the first with Cargo X to actually digitize some of the trade documents and use them. Then there was Morocco. Morocco, they are into the MLETR stage 1, what they call tracker. So Morocco's economy is a large one. They have 2/3 of the known phosphate reserves. They're politically stable, and they play a key role in Africa. And as a French-speaking country, obviously, when France voted into law in June the MLETR framework, it made sense for Morocco to start actually exploring this. When it comes then, the other one is Qatar, which is in the same stage as Egypt. They're doing some working groups. They're getting the business sector together. They're creating some really great content via ICC to educate people, because at the end of the day, there is a need of education. And if you don't know what's going on, it's very difficult to implement. And they're also looking at the legal gap analysis kind of thing. And then the other one is the Kingdom of Saudi Arabia. So they are into the same thing. They've had discussions. So the EBL is permitted under the Commercial Maritime Law. So the WTO has been working on this with the KAC members. And so they are aligning and looking at electronic signature recognition, because in Saudi, until now, you couldn't sign electronically documents. So this is a huge step, because this is going to facilitate the way business is done in the region, especially with a key player like Saudi Arabia. And then I would end with Bangladesh when it comes to the Middle East, which is also in talks with the governments and so on. But as you know, Bahrain, UAE, and some others have already been, acting on this. And in Europe, we are seeing the same thing. I mean, the French have voted it into law, the Germans, everybody is pretty much looking at it through the lens of the European Commission. Because at the end of the day, it's Europe, and the UK is leading the way in this as well. And I see some POC taking place and being prepared, and the POCs are going to be key, because they're going to help identify where the key need and work needs to be done.
I will probably ask you a little bit about those early stages, but this obviously is a key important driver for trade finance on blockchain, because of having those titles, being able to legally be sitting on a blockchain or on a cloud for that matter, is only now really just getting to that tipping point throughout at least through the G7. And I'm obviously looking at the two sides of the trade, the cheaper trade finance, that's being disintermediated through blockchain to the SME or the corporate, but also as an investable product as well. So there's that two sides of the trade. So I think that kind of leans into what Trade for Next was all about, or at least, it's raison d'etre, the reason for being. Maybe you'll explain what is Trade for Next's role in leading this sort of change.
Trade finance is a marketplace where we want to be able, and we have been able to, in POCs, to fund trades in a decentralized manner, using the trade documents as a collateral, tokenizing the EBL and fractionalizing it if needed, and raising liquidity. And I think on this, Sunil can be go more in details. So the idea initially, before XDC was created as a blockchain, was to be able to help and work on this trade gap that is evaluated between 2.5 trillion to 5 trillion based on the sources. The main, I would say, sector or are the MSMEs. The MSMEs are the ones struggling to get this funding for different reasons, because of lack of credit, because they are in some sensitive regions, because the Basel made it for the banks to have more requirement for capital, so it takes longer to get these fundings, if ever they get the funding sometimes, and banks prefer to focus onto the larger deals. So there is a gap in the market, and these companies need financing, and this is where TradeFinex was, designed for, is to bridge that gap and be able, using these digitized trade documents as a collateral, to finance either their treasury needs or their time, their shipping something, etc.
Thanks, Saloi. I mean, imaginably, you and Sunil have developed a very tight, relationship over the last couple of years. I know the XTC Trade dApp is sort of been born of a lot of hard work over the last, I guess it's been in existence for 18 months now. Sunil, how big is this a driver for what you're doing and for others in the market? Obviously, having the MLETR coming in. Maybe explain, if you want to throw a few PowerPoints out, please be my guest.
Yeah, sure, Brian. I think Salva and Brian covered very interesting topics. Salva spoke about the gap. Brian spoke about all the latest development and how number of documents are being used, which itself is a large part of a cost for any doing trade. So, I always like to put the basics first so that everybody understands what we are talking about. We are purely talking about moving away from those paper and dealing with data. So it's data, not document. So that's the definition for you all from ICC. So I just, I'm glad that this slide was there for some time so everybody would have taken some notes. So what we are basically looking at is industry-wide approach. What's the point in me having digital, but then other party is not digital? So it has to be everybody. So then we have network effect. So that is where the industry is moving. We have support from, everybody generally understands digitalization. So nobody is against it, but it's just that they are in a different, I would say, journey. Somebody is aligning, somebody is legislatively looking at it, somebody is looking at their internal system. Some countries are still working on their single window solutions. So that's where the delay is all about. But we see a very positive response from pretty much every corridor we have spoken. So what I came across is also this very interesting paper, which came across what exactly is the impact. I think many of our viewers might have access to this, but still, I would like to have everyone send this particular report, post the event. I will send this document as well. So to Bryan. So maybe Bryan and Sean, both of you. So maybe
Bryan
you
knows
can,
well about it. We've spoken about it.
yeah. So maybe you guys can send this across. So $2.5 trillion is the big problem. How do we solve this? See, people will not go for digitalization just for novelty unless it helps them to achieve something. And in the space of trade, we have to make a level playing field for big, small, medium, any kind of companies. Nobody should be restricted to the only access of capital coming in from high street banks. So this is where we have to open up from new source of liquidity. So that's more important. The new source of liquidity, there's a plenty of liquidity. So today, for one, XCC Trade Network has multiple liquidity providers, and all of them are non-bank entities. So they get to enter trade finance and enjoy a bigger return. And this is only possible if everything is digital. So one has to think 100% digital. My digital information is shared, and then I borrow trade finance against that. So that is what we need to address. And we have to make sure that this gap gets reduced as we start adopting more and more digital medium in our transactions. I think we spoke at length, so maybe not taking any countries in particular, but again, there's a beautiful tracker which ICC DSI is monitoring. But if you look at, the big numbers here, 37% of global GDP is already aligned to milliliter, which itself is a very decent number and increasing. And this also provides enough network effect. It's now on us to start using more digital medium so that we can take true benefit. And there are many companies, those who are doing it. Again, there can't be a single solution which will cater to everybody's requirement. So there are companies which are catering to a particular geography. There are countries which are global like ourselves. We are pretty much there in every country. And we are doing this all together. We are part of many experiments, I would say, POCs, where they are, benefiting, seeing how it is working for them. And this is something which Selva mentioned that, some country is in stage one, some country is in stage three. I thought I'll just put one slide so that everybody understands what these stages basically means, where they are. So if there is any interest for anyone in the audience that, hey, I'm doing this with this country, I see they are in number three. So what happens now? Can I do a transaction with them? Talk to us. We do this on a daily basis. We'll be able to help you there. So last slide I have is there was this report which came late last year from ICC DSI collating all the transaction, and we are lucky to be featured there as well, where, we used a digital promissory note. That was, again, promissory note is a digital instrument which always very cumbersome, takes a lot of time in and out from the bank, getting the promissory note, getting accepted, then paper, validation becomes problem. All of that can be done in minutes with few clicks. So there are multiple type of digital instrument which we are working on. One example I could give is a warehouse receipt. Again, that's the one which is going to open up a lot of liquidity if you are able to provide a warehouse receipt which is verifiable online. Again, that's something which we are bringing to practice now, and a lot of trade finance is being exchanged based on a warehouse receipt. So happy to drill some of this transaction a bit more, but then it is important for the audience to know that we are looking at all types of document, working closely with industry, and there's a plenty of things to be achieved by getting into digital.
Sunil, very, very amazing, information there. And, I like the philosophy as far as, if you're not at MLETR 5, which is where we are as a country, even, there are ways of getting, some feet wet or dipping toes in. I want to throw that to Bryan, actually, having that sort of background at the Australian Chamber of Commerce and Industry as the Director of Trade. It was some years ago now, and obviously you've seen that APEC report and of that nature. Is this the leading edge that could get Australian industry motivated or mobilized to sort of become more familiarized with using blockchain, DLT, or cloud, or whatever it is, into that space of increasing digitalization, especially with the trade finance carrot? Sunil's saying that we can start exporting already, which we can.
And absolutely. And so Australian exporters, as Sunil points out, if you're going to another nation that already accepts this, you can do it freely right now. There's no restriction on that. The wider difficulty, though, I think Sean was touched on by some earlier speakers around stop talking about the technology and just talk about the service. What's the outcome that you want? And so what we really want is, swifter payments, swifter clearance process through government regulatory bodies like customs, etc. And so how do you achieve that? And that's where some of the problem is the banking and finance system. When you look at trade, people need to understand this a little bit, so sorry to labor it, but trade, when we talk about trading goods, the goods are the last thing that happens. The first thing that happens is the parties agree to the contractual terms of whatever it is they're going to do. And who's responsible for what parts of the logistics chain as they move across it? And that's using an ICC set of terms called Incoterms, International Commercial Terms. And that determines which party is responsible for what. And then you've got the payment thing. And the payment part of it might be prepayment. It might be payment on receipt of goods. It might be payment somewhere in between those two things. And that's where the finance sector is working. And that's, the e-bills of lading that we've been speaking about. They transfer title. So as goods move across the supply chain, title changes somewhere in the middle of that. And, there is one of them, just to give your audience some illustration of this. There used to be an Incoterm which was called free on board. It's now obsolete, but it was notionally an invisible line for when your goods left the dock and got onto the ship. And if the goods were dropped, for example, in that process of moving from the dock to the ship, well, whose insurance is to pay for that? And so it's a methodology for how do we determine who's responsible for what. So just to illustrate that point. And so the finance sector and the payment sector is reasonably advanced, as you've all been talking about for the whole of the day. But the movement of the goods is not. And the movement of the goods is still very highly dependent on all of these paper documents. And the problem for the payment sector is that some of those e-bills of lading is conditional on passing the entry requirements for the desired market, or it may be even getting it further than that and having to deliver it to the location of the buyer, for example. And so the e-bill of lading is being held as each one of those things occurs. And so you can see a really strong use case for things like smart contracts associated with that, where you can watch what's going ahead and you know whether or not the goods were damaged in transit, or if they had a refrigerated requirement, for example, whether or not their refrigeration requirements have been met or exceeded, all of those times. And so you can then set up, the contractual terms which need to be satisfied and describe them in terms of code. So technology is really going to support this sort of stuff, but we're not there yet. And the problem here is governments, right? The industry players are wanting to do it. Plenty of evidence today around that. But the government side of that is often very reticent. They're risk averse and they like the old system and they don't trust the new system. And so you've got this piece of paper. Why do we develop these piece of paper systems? It's because somehow we develop trust in a wet signature from somebody. I can watch them do that and then be handed a piece of paper. I don't have that confidence with the digital systems. And I think it will take a fair bit of show and tell from the industry to demonstrate the confidence in that. But it's wider issues like, well, how do I protect my data? Is this private? How do I stop hackers? You're asking me I have to deal with this thing with, fiat currency between Australia and Japan or whatever I'm doing, and the US dollar. And I only just understand that. And now you want me to deal in something else called gas that I've never heard of before. There's a few bits, we've got to go through the educational process to get people to widely adopt.
Most definitely, Bryan. Excellent points, and it is going to be a learning journey, and obviously we're probably somewhere in the middle. I wouldn't say we're at the beginning, but very excellent points. We are talking about essentially a finance tokenization or a private debt tokenization, like you said, in various forms. So TradeFinex has done some pilots, I'm pretty sure, with invoicing and factoring and things like that. Would you want to speak on some of those experiences? Because it isn't just a simple short-term loan. What's your experiences anyway on those sorts of pilots? And I do believe InvoiceMate have been making some good inroads there, as an example.
Yes. So basically, we were looking, obviously, because they were most of them, not all of them, but most of them POCs at small tickets and around 100K or up to 200K. The idea was to test the system, the tech is working, but also that it's done within the time frame. So yeah, we've done a few with InvoiceMate, with some other smaller companies. There was also a case study between India and the UAE, where, for instance, an exporter of fruit and veg needed treasury. So they raised a request creating a promissory note with XDC network. And following that, the documents created were checked and financed via TradeFinex. So this allowed the person exporting, because they had to pay the farmers within 3 days. So that allowed them to be paid right away, and then the trade to happen. So this provides with more liquidity. But I think Sunil would be even...
I was just about to jump over to Sunil. We are running a little bit out of time, but I just wanted to see, Sunil, you're having recurring transactions. I mean, you're past the pilot, the MVP, you're a fully fledged business. Maybe just quickly, maybe 2 minutes, just give me an idea of where you guys are at. Thanks, Saloi.
Sure, Sean. So basically, if you look at XCC Trade Network, this dApp is already live for 1.5 years now. The whole of last year, we did plenty of transactions. And in fact, as we speak, monthly, we are averaging 3 to 5 transactions. And the example Salva was giving is exactly what I was telling in the beginning. India is not military aligned yet, but there are transactions happening from India to UAE corridor. And these are regular transactions. Whatever is getting shipped from Dubai, from Bombay to Dubai, these two ports, we have promissory note and electronic bills of lading based transactions where they get financed based on whatever document they provide. And also, to add to Brian's point, um, when you do electronic document movement, the payment and settlement becomes much faster. You see, and you have absolute visibility. If I can send the document over a click, I'm expecting the money also to come into my fiat bank account over a click. So we can actually offer T plus one. So that's the commitment we are providing. The industry is not used to getting T plus one. They usually T plus three, T plus five, and also additional charges. So these are the place where you have true benefit because not sometime finding the trade finance, it is finding it in a cheaper way and a faster way. That makes the job much easier. So I would stop there. But then, if anyone wanting to know more and keen to do their transaction, ping us. We'll be more than happy to help you.
Well, actually, I wouldn't mind just some last couple of words, Sunil. Where do you see things going in the next 5 or maybe 3 years, for XTC Trade Network, dApp, and maybe within Australia?
So we work within the industry. Sorry. So we have to see where the industry is moving. So we have commitment from large ocean carriers, 2030, 100% electronic bill of lading. So there's no choice. You are definitely going to get electronic bill of lading. So what do you do with that? So the earlier you start using one of those applications out there, the more familiar, more easier it is going to be for you to make the transition. So it's only a matter of time. I see a bright future for anyone who is getting into trade finance. And also, if you are a liquidity provider out there, I mean, start exploring application like ourselves because we are opening up a new window of opportunity by getting into trade finance. It provides you higher returns as well. So it is win-win for the borrowers and the lenders. We are only making it happen using the technology.
Absolutely, and this industry in finance is one of the least defaulting, finance products. Bryan, Australia moving into TradeFi as part of the paperless agenda. Can you see TradeFi sort of like Sunil is suggesting, sort of being that that leading edge?
I think it can be. There's a lot of opportunities here, and well done to XTC for their efforts so far in this. We have a number of sandboxes. So as other speakers have said, there's been the finance side regulatory sandbox. There is actually a customs regulatory sandbox too, but at the moment, in my view, it's too narrow to be useful in this. And what we need to have is a supply chain regulatory sandbox, or a way that for a complete supply chain we can look at digitalized solutions so that the companies can play, develop innovations and not be trapped in the current regulatory framework. And then that should assist the government to come up with this goal in their own digital strategy of a leading economy related to trade by 2030. Because at the moment we're a long way off the pace.
Thank you, Bryan. We'll certainly be talking more about that in the months to come. Saloi, I'm going to give you the last word, and there is one question that's actually come up through X. Is there going to be a TradeFinex 2.0?
Oh, definitely. It's very shortly gonna go online, and I've seen the first changes and updates, and it looks really, really, really good. So it's just we're just finalizing the details technically.
Okay, no spoilers then. Okay. Well, thank you very, very much to my panel today, Bryan Clark of the Australian Centre of International Trade Investment, Sunil Senapati, CEO of XTC Trade dApp, and Saloi Benbaha, the institutional lead for XTC Network and Trade for Next. I hope everyone has a bit better idea of the context that we're dealing here with trade finance as a tokenization use case with blockchain in particular. It's immutable, and XTC Network, which is a very safe pair of hands. Let's get this paperless trade moving here in Australia, but we don't need to wait. We can already export. Thank you very much. Amy Rose, back to you.